My Novated Leasing Nightmare story about how I novated leased this car in Australia is an incredibly popular video on my channel, and it generated a lot of feedback, including from some experts, people who are in car finance industry. So the best I can do for you right now is welcome you to round 2 of this topic discussion and read out some of the comments from what at least appears to be more educated people's opinions, tips, numbers, explanation of something that I wasn't able to articulate properly to you in this previous video, which I still very strongly encourage that you research if you're only just starting your research of novated leasing in Australia. I'm no expert, but those people are experts. So let's listen to them, what they have to say, and hopefully this will help you. Enough said? Okay, enjoy the video, like the video, let me know in the comments down below if it sparks any further questions, any further thoughts of you. Maybe some of this remains misrepresented or something like this, so we can always have a round 3 discussion maybe some other time. Enjoy the video.
Okay, first we need to compare apples to apples. Based on the small amount of information you have provided, I am assuming that the leasing company did the correct calculations, which I am confident that they did. Your total cost per month of 1,391 Australian dollars would be made up roughly of a post-tax deduction of 817 and pre-tax deduction of $574. I would then calculate that your lease repayments are about $920 per month and your running costs are about $470 per month. So the total repayments of $83,460 plus $14,000 plus GST equals 98,860 Australian dollars. You missed that you would be paying GST on the residual. The first point that I'd consider that many may not pick up on is that your calculation includes all running costs. Why add the running costs in your total cost when you will have to pay for those regardless if you bought this car or held onto your old car? Moving forward, I shall base my calculations upon the fact that you have decided to buy a new car and assuming as an alternative you would, say, take out a personal loan and not going to pay cash for the car. The next point you neglected to highlight is that when the car is purchased through a novated lease, the amount financed is net of the GST. And also the running costs are net of GST. So over the same period of 5 years, a personal loan of a $55,000 car, you will have to pay GST when you buy it yourself at, say, 6.5% interest, would have your repayments coming in at about $1,075 per month, and you would still have the same running costs at about $470 per month plus GST. So your total repayments would be about $95,124. Here is the kicker. That $95,124 will be all after tax. With the novated lease, it will be a total cost of about $98,860. Novated lease will most likely be at a higher interest rate and would be $64,400 after tax and $34,460 pre-tax. So assuming that you are still in the 39% marginal tax rate, including Medicare, your net after-tax cost would be $85,420, a net saving of $9,703 over the life of the new lease. Now on to the next point about changing jobs. You will save even more over the life of the lease as the value for fringe benefit tax gets reset to the trade-in price when you renovate with your new employer. So if I understood correctly, you have changed the employer after 2 years, which is correct. So even if I'm wrong on that assumption, the concept still remains the same. Your car will have a trade-in value of, say, $35,000 and your post-tax deduction will reduce to $583 and your pre-tax deduction will increase to $808. The higher the pre-tax deduction, the higher your savings. So looking at the life of the lease, total cost is still $98,860. But working 2 years at your first employer and then the remaining 3 years at your new employer, your net after-tax cost would be $82,145, a net saving of $12,979 over the life of the lease. Now, I sympathize with your experience with the leasing company, and missed out on 3 months of pre-tax benefits, and perhaps a better one may have shaved 1, maybe 2 months off, but the pre-tax loss suffered in your case is in the order of $1,600. So when you put a headline of Novated Lease Nightmare, the real nightmare was the leasing company you were using delayed you a month or 2 of pre-tax benefit, plus the administration hassles involved. 5 stars for getting all your information together beforehand, as you may have lost another month. Even if my assumptions on the car purchase price, lease repayments, and running costs are slightly out of concept, and calculations of the magnitude of savings would still be pretty close. Here is a comment from Fishfulness. Thank you very much, mate. I've had 2 novated leases in the past, back when there was a variable fringe benefit tax modifier, i.e., the more kilometers you did, the better it was financially. I found, and I imagine this is still the case, the higher the month-by-month costs, the better off I would be by leasing. When I got a bit bored of the vehicle partway through the lease, I got a payout figure, and it was still a good part of the original price. This is because for the amortization model of the lease or the loan, you are mainly paying the interest on the earlier part of the lease, not the principal. I maintained the spreadsheet of my expenses to ensure I was actually ahead, and each year I was better off to maybe to the tune of $1,500 or so on a $34,000 car initial purchase. The extra admin of claiming and keeping abreast of the financial assessment of the lease was a bit of a pain, and the longer lease meant you felt locked in. But in the end, I stayed with the same employer and just ran the car knowing I was better off. But it was limiting, and there were a few gotchas. For example, the variable fringe benefit tax bands did not take into account any time your car was off the road for repairs. You were still expected to make the kilometers to stay in the band. That cost me during one of the years. Like you say, if you have a good expected tenure with your employer and want to keep the car for longer, it can reduce your lease costs and have a longer lease. The other option is to lease a nearly new car, as the car can be 7 years old at the end of the lease. That way you are not financing that period of ownership where you are taking most of the depreciation hit. A few other comments. So we have one from Rusty O'Mara. Thank you, mate. I have been in the asset finance space for years. Most of my clients will do a novated lease once and never again. Everything attached to the maintaining novated lease has a margin, including in the finance. If you are not claiming any business use on car, just do a regular consumer loan. Are there tax incentives? Yes, as long as you are close to or crossing the tax threshold. Unlikely for most. Again, everything has a margin. Even if you factor in a $25 per month admin fee from the provider, it's still not worth doing. By the way, $25 per month would be around 1% variance on the rate on a $50,000 car. Anyway, good to see someone telling the truth about their novated experience. Thank you very much. Now another shortish comment from Count Zilch. Good talk. Same thing happened to me. Fortunately, my new employer was with the same lease company, but it was still really painful. A few points. First, make sure that you have your own insurance in place before your termination date. I found my previous employer was self-insured and I was not covered from the day I left, even though I had already paid for the full month. Second, a benefit you didn't touch on is the leasing companies that you get much better deal for the car price than you could be walking into a dealer. Number 3, the main benefit in the end is the lease payment. Can you buy a 5-year-old car of that model for $14,000? No? Take the difference between that and market value and divide it across your monthly payments. You also know the owner and services history for that second-hand car. Number 4. I get 1 or 2 year leases. You can always extend, but you might end up with a lemon or a car that you didn't like. Number 5. The pre- and post-tax stuff is confusing to work out exactly how much you are getting. Number 6. My petrol card let fill up almost everywhere except 7-Eleven, even though it only had the BP logo on it. Double check it's a fleet card. Number 6. Don't forget, if you have a current car, to calculate how much you save if you sell it and put that money into a mortgage, offset, etc. Number 7. The longer the lease, the more GST you save. This doesn't apply to the initial cost, so you can get an extra 10% discount. However, you need to pay it on the final payout, which is lower the longer you lease. Alright, excellent. And the final one for today, my friends, to kind of wrap up these additions of extra information about the Novated Leasing Nightmare that I've experienced, but a lot of people corrected me on this, is a wonderful comment from someone called @Eskimo. Thank you, mate. Having worked for a fleet management company that offers Novated Leasing, here are my tips. Number 1. The amount you pay pre- and post-tax is based on the taxable value of the vehicle, which is approximately 20% of the purchase price. You pay the taxable value in the post-tax dollars each year and the rest in pre-tax dollars. To increase the proportion you pay pre-tax, buy a 2-year-old used car, as it would have already depreciated, lowering the taxable value, but still has manufacturer's warranty. Number 2. Do the numbers on whether you use the company's insurance or your own. If you have a good driving history, you may get insurance cheaper than the fleet policy. However, one advantage of the fleet policy is that there is no age restriction for excess. Fleet insurance may be cheaper if you have poor driving history or have drivers aged under 25. Number 3. You can generally arrange your own maintenance, insurance, or fuel and keep the receipts and then claim these expenses back. This is often worthwhile, as the fleet company will sometimes charge for providing those services. You can buy the cheap fuel and still claim some of cost as part of your lease. Number 4. Whether you can buy a vehicle outright or lease it. There is a financial cost of the vehicle's price. The lease interest rate will probably be higher than you might source elsewhere, and even if you pay cash, that money could have been in the bank earning interest. When comparing costs, use a spreadsheet lease payment calculation over the same time period to compare the difference in the periods over time. While the lease interest rate may be higher, the tax saving may still be beneficial. Number 5. If you don't spend all your budgeted expenses, you will get the remaining funds back at the end of the lease. However, they will deduct the tax payable first. In the last 6 months of the lease, if it looks like you will have excess funds, either reduce your budgets or look to spend the extra funds. It may be worthwhile to put new tires on the vehicle in the pre-tax dollars get that back after tax. And number 6, don't commit to a too large of a lease. It's a trap to get caught being mesmerized by a potential big tax saving and not leaving enough of your salary for living expenses. Don't allow yourself to be car rich and cash poor. One of my favorite comments. Once again, thank you to all of the contributors, and I very much hope that you, my friends who are listening to this, who are watching this video, and who are interested in the intricacies of novated leasing in Australia, you have benefited from some of these comments. I know a lot of numbers, I know people express their own opinions, but I have selected some of the comments that I've received which appear to be coming from people who know what they're talking about. So if you are seriously researching novated leasing, please give this video a quick like and leave your comments below in case there is anything else to expand on, because this is a popular topic. And by the way, there are more comments to where it came from. There is more to talk about if you want me to create a volume 2 of this same kind of nature. And we can continue discussing the intricacies of novated leasing in Australia, where I very much rely on your expertise and my just experience from the first hand, how I'm experiencing novated leasing in Australia. Thanks again for listening to me for over 15 minutes. That's a long video. Please give the video a like if you haven't already, and I'll talk to you next week about something else value cars related in Australia. Goodbye for now.